Without paper money, economies would likely shift entirely to digital currencies or cryptocurrencies. These systems would allow for quick, secure transactions globally. Governments and banks would need to adapt to regulating and stabilizing digital forms of currency, changing the way we view value and exchange. Enhanced efficiency in transactions. The absence of paper money would make transactions faster and more efficient. Digital payments, such as mobile wallets and contactless cards, could streamline purchases, reducing the need for physical cash handling, which often incurs additional costs for businesses. Increased focus on cybersecurity. With digital money, cybersecurity would become an even more critical component of the economy. Governments and private companies would need to invest heavily in securing financial data to prevent cyberattacks, fraud, and data breaches that could undermine trust in the system. Impact on informal economies. Without paper money, many informal economies, such as street vendors or cash-based services, would struggle to survive. The transition to fully digital currencies could exclude individuals without access to banking or technology, creating new barriers for the unbanked population. Changes in monetary policy. Central banks would have to reconsider how they manage the economy. Without physical currency, controlling inflation and interest rates would rely more on digital tools and algorithms. Central banks might also have the ability to implement more precise monetary policies in real time. Loss of privacy in transactions. Paper money offers a level of anonymity that digital transactions do not. Without paper currency, every transaction would leave a digital footprint, raising concerns about privacy and surveillance. Individuals could feel uncomfortable knowing their spending habits are constantly tracked. Impact on cash-dependent industries. Industries like gambling, certain retail sectors, and informal services rely heavily on cash transactions. These businesses would need to rapidly adapt to digital payment methods, which could be costly and create challenges for customers who prefer or need to use cash. Potential for financial inclusion. Digital currencies could potentially improve financial inclusion for people without access to banks. However, this would only be true if there's access to reliable technology and internet services, which might require significant infrastructure improvements in developing areas. With no paper money in circulation, the risk of counterfeit bills would disappear. Digital money is far more difficult to counterfeit, leading to a reduction in fraud. However, new forms of digital fraud and hacking might emerge as a result. A shift in consumer behavior. The move to a cashless society would likely change consumer behavior. People may become more conscious of their spending since digital transactions are easier to track. However, this could also encourage more impulse purchases due to the ease of digital payments, leading to potential increases in consumer debt.